All right, this is going to be on value investing. Given a trade portfolio, I'm using TD Ameritrade and I'm using a stock screener. Yahoo also provides a free stock screener if you don't have a trading platform. All trading platforms have these stock screeners. So I'm going to use everything that I showed on value investing to find possible stocks to invest in. So I'm going to go to fundamentals here. So I'm going to go to return on equity. And from what we read, 10% or more is a good return on equity. Let's go to valuation. So we wanted a price to earnings ratio, price to sales ratio, price to book ratio. So price to earnings ratio was either 20 or less. Price to sales ratio was 2 or less, and a price to book ratio was 1 or less. You're seeing as our stock screener for value investing, we went from 2,285 options to only 351 options. I want to make sure to get my volume here. This is going to eliminate every stock that is not liquid. We want 250, 100,000. That brings us down to 91. So from here, this is a good sample of stocks right now that are undervalued in this market with coronavirus happening and a lot of people out of jobs. There is one more thing we could do. If I go to fundamentals, I'm looking for debt to capital. Now, when we do this, normally what's going to happen is if I want from the 0 to 25% range, it's going to lower a lot of the options, right? So that only brings us to 23 viable options. I'm going to eliminate that. Most companies have debt. I want to see what these 91 matches are, and I want to share them with you guys. So let's see, what do we have here? Medical marijuana. I'm not familiar with a lot of these stocks at all, right? And Navient Corp. Wow. That's, I believe, is a student loan. Yeah, that's the student loan company. That's undervalued. It's at 778. Looks like it was at 1545 before this happened. That might be an option. I would be wary of that, right? We want to see who goes into Congress and what they're going to do with student debt before we invest in something like that. And Core Civic. I'm a fan of Core Civic. Again, this is another stock where you got to be wary of your politicians. So Core Civic is a private prison company. If Democrats get elected, they're removing all private prison companies, which means the extension of this stock. If a Republican gets into office as president, that means the stock still exists and they give very good returns to their shareholders. General Motors is a friendly name right now, right? We want to be careful with General Motors. Aflac has always been here. Aflac is apparently very undervalued. I don't see them here, but the shoe companies were undervalued recently. Foot Locker, and I believe Finish Line. So one more caveat that I would say, even though all of these fundamentals say that they're undervalued, read your news, be careful. Sometimes when you have these stocks that are undervalued and there is a bit of bad news, what happens is a reverse stock split. And if you're not paying attention, the stock normally tanks after the reverse stock split, which leads to an immense amount of loss. This looks very interesting to me. Morgan Stanley. Banks are down right now. Morgan Stanley is at $46. Got close to a 3% yield here. This is undervalued. Love to read analysts. Analysts are saying to buy this as of the 20th. Today is the 20th. So as of today, I would actually say buy Morgan Stanley. I like Morgan Stanley. If you look at its 1 year outlook, I would say it is a sure bet at this point that it'll probably go back up to 50 within a 3 month time period. Um, it's about a $4 gain. That's a good percentage there if you're investing $1,000. So this is a real life sample of value investing. Little side note here: most people that value invest, they do not take their money out of the market for at least a year because they only want their capital gains tax to be 10%. I hope this was valuable.